you are our clerk, I assume. That's why you're here?
That's why I'm here.
Okay. And Luke, do we have any members of the public signed on at this point?
No, we do not have anybody from the public right now.
All right. Well, we'll check again during public comment. But at this point, yes, let's call the meeting to order. And Amanda, if you could do the roll call.
Certainly. Committee Member Seebach.
Here.
Committee Member Rangel.
Here.
Committee Member Rickard.
Here.
Vice Chairperson Funk.
Here.
And Chairperson Bourbeau.
Here.
All present.
Okay, so we'll proceed to the next item on the agenda, which is the consent calendar, which is one item, the action minutes from our meeting last year on May 30th, 2019. Is there any discussion of that item? Okay, seeing
I
none.
move approval as submitted.
Yeah, I just want to check, make sure there's no member of the public wants to comment. I'm assuming not. Okay, then we'll proceed with the motion. Motion by Member Seebach. We have a second. Second by Member Funk. And let's go ahead and go with the roll call.
Committee Member Seebach.
Yes.
Vice Chairperson Funk.
Yes.
Committee Member Rangel.
Yes.
Committee Member Rickard, sorry.
Yes.
Chairperson Bourbeau.
Yes.
Motion passes.
Okay, so next we're on to public comment, which I don't believe we have anybody on. Cindy, would you like to make any comment on items under the purview of this committee, but not on the agenda?
No, thank you.
All right, thank you. No, Luke, no one else has joined us to make comment, I assume?
Correct, no member from the public yet.
Okay, so we'll close public comment. We'll move on to business. And we do have one item, which is amendment of our investment policy, item B1. And I believe Treasurer Seebach, you're going to present that staff report.
Yes. I think the state law requires the investment policy to be adopted by the city council and recommended by the city treasurer. And it needs to be updated every so often. We haven't done it for a while. So Jerry and her staff started working on that. And I asked them to look into a couple of minor changes. No, the one's not so minor. Let's just call them changes. And that I would like to have incorporated. And they researched those and drafted language to that effect. And I think they're in agreement with what we came up with, I hope. But I appreciate their work on this for sure. So one thing is just updating having the process of having the council look at it from time to time. But the other substantive changes relate to a limitation in there that we have had, the city of Atascadero has had from maybe since the time the first policy was written, of limit of no more than 40% could be invested in, of the portfolio could be invested in U.S. agency bonds. That's like federal home loan bonds, Fannie Mae, Ginnie Mae, farm credits. Those are considered very safe in the United States. They're rated AAA. There's never been a default. But there's times when we have bumped up against that 40% limit when the agencies were the best vehicle going. And so we couldn't put more money into that because of that limit. And my recollection was that most city and county investment policies did not have that limit. The reason being that, again, these were considered as just about as safe as you could get, being U.S. agencies. So Jerry and her staff researched that, and they found that the state law does not require a limit, and that I think Jerry and Cindy you looked at some other cities and counties' policies and did not find that limit in there. Is that correct?
That is correct.
So we were kind of an outlier. And so I'm asking that that limit be taken off. That doesn't mean that we want to put 90% or something of the portfolio all into government agents, US agencies. But there have been times when I have to, it's probably somebody wanting my support for city council or something like that. There's times when that's the CDs are up and agencies are down, or other vehicles, and that we would like to have more in US agencies. And actually right now, that is one time that it looks like they're one of the best deals going. And that, as I said, we're not an outlier. So I'm asking that we take that limit off, and we will still maintain some diversification with CDs and the local, the state local agency fund primarily.
So Jerry, when you
Mhm.
refer to, in the staff report, when you say agencies with a capital A, you're referring to US government agencies.
Yes,
Okay, because I was not clear on that. Thank you.
that's in the policy. It defines those. There's a glossary in the back that says what those are. Then the other issue or change, and this was a couple, about 3 months ago, when this financial crisis again was getting going very good. The Fed was dropping the discount rate, driving down interest rates massively. One of the best things going for a short period of time was municipal bonds, meaning cities, counties, school districts, or even the state of California issues bonds, and they're out in the market or they have new issues coming out. And it's legal for the city to invest in those, but we never had it in the policy. And I didn't ever suggest that be putting in, because it really usually didn't make much sense. The rates were too low on them. They weren't an attractive investment. But for a few months, they were the best thing going in the state. And that was because, well, just the way the market was heading, there was still some product out there that was available that still carried a good rate. And we couldn't jump on that opportunity at the time because our policy prohibited it, or did not allow for it. Didn't specifically prohibit it, but we have to have it explicit in there that that's an allowable investment. So that's another thing I asked Jerry and her staff to research was, did others have that? And I knew that there was the government code allowed for it, but they came back and developed an amendment to the policy which would provide for that as an option. Unfortunately, right now, it looks like it's not anywhere as attractive as it was a couple of months ago, because everybody has jumped out and bought all the good municipal bonds that have been out there, at least in the short term. What we are also limited to 5 years maximum. So right now, we probably won't buy any or very many, if any. We might find an odd nugget here and there if we keep our eyes open. But sometimes there is risk, and I don't want to take any risk. In order to get another $50 a month or something of interest earnings, it's not worth taking any risk that makes us not sleep well at night. So we're not going to do that. But there are AAA rated municipal bonds out there. There's ones that are insured, that have an independent insurance company that stands behind them. There's some that are GO bonds, meaning general obligation taxes support them. I would be probably comfortable with buying ones that had a property tax pledge, as being somebody involved in the property tax system for many years, I have a faith that those property taxes will be collected and those bonds would be paid. So I think there could come a time, maybe soon, but then we would make sense to get some municipal bonds. But we don't need we're not going to put 90%. In fact, I think they put the 30% limit in, which is state law there, I believe. Isn't that correct, Jerry? I think there's a requirement in the state law for no more than 30%.
Yes, that's right.
So I'm just asking that be added as another option that may make sense at some point, depending on market conditions. And I think the only other change had to do with, there was some language in there that said that there should be monthly reports to the council about investments. And we have done a quarterly report to council. But Jerry said that there's an internal report made to council every month of financial position or something. I haven't ever even seen it. But Jerry, can you speak to that? You believe that would meet the requirement of that law?
Yes, so that's the summary report that goes just to council kind of offline, not through the council meeting process. It's just the summarized brief version of kind of where in total the investments are and the change from last year or last month. But, it's much more succinct than the treasurer's quarterly report that goes to council.
It just shows the investments by category, not by specific line item like the quarterly does. And Councilmember Funk has a question?
Yeah, I'm just wondering if we could, as a matter of practice, add the treasurer to the CC list on that report so that he knows what's going to council. It won't be any news to him, but at least he's got the same data.
Yes, absolutely.
Thanks.
I might even read it once in a while or something if I'm trying to go to sleep at night or something like that.
Yeah.
Just joking. I'm sorry. I'm done. So again, thank you for the staff help with this. I hope this committee will support it. We need the committee's recommendation to push it onto the council agenda, and that's our plan. Any other questions?
Well, of course.
I can rely on you.
I would say I wouldn't be me if I didn't have questions. Couple of things, Jerry. Jerry Seebach. When you referred to adding, local municipal agencies and potentially other state municipal agencies, as individuals, an attraction of a municipal bond is usually its tax-free nature, income tax-free, which of course doesn't benefit us as a city. So normally they're very low yielding, but there are non-tax exempt municipal bonds. Are those the kind that you're talking about in here that tend to have a higher rate than a tax-free one?
It's possible. Yeah, for example, the pension funds, we're doing the pension obligation bonds, which are priced at a little bit higher interest rate. But if there's a safety issue on them, we might not. Again, we would want them to be either insured or rated very highly before we would consider them.
Right. And like for a pension obligation bond, the credit of the underlying entity is going to give it its rating. But that's a good example because those are not tax exempt. And I just assume to get the kind of higher rate that you talk about, it would have to be a non-tax exempt one. Well,
again, when we're talking about a few months ago, 1.5% was a huge rate compared to in today's market right now. What we're buying, we haven't been buying anything much for the last few months because our ladder that we have is we're always buying out 5 years approximately. Mm-hmm. And the rate right now, I checked it yesterday morning on CDs and government agencies, was about 0.4% for 5 years. And it just breaks my heart to think of tying up the city's money for 5 years at that kind of a low yield. But that's what the market is right now. So if we could have gotten 1.2 or 1.3 on a municipal, that would have been a good deal. Those have dried up now. It's going to be hard to find any unless you're willing to take risk. And then I'm not willing to take any significant risk.
Well, speaking of that though, you mentioned our laddering policy. So where we're typically, when we have money, something matures, we go out and buy something else that has a typical 5-year window on it. But when you're in an environment, which hopefully is short-term, where the rates are virtually nothing. I mean, we've been in a suppressed interest rate environment for years now, but not a super suppressed environment of next to zero. Does our policy call for us to go out and buy the 5-year thing, or would it be in an environment like that, say, hey, we're losing 4 basis points of income. Why don't we just wait for 6 months or 3 months and see how things are? Because maybe it'll be back to 1%.
Well, that's pretty much what we've been doing. We've just been leaving any new money that comes in, put it in the state pool. It's paying more than the agencies and stuff that we could buy. We might buy shorter. For example, 2-year, we could go 2 or 3 years, but those have been down to 0.25% or something like that.
We're not locking ourselves into buying the 5-year. We've done what I'll call the smart thing of park it in LAIF for a bit, let things come back. And then,
yeah, LAIF has been falling, but not as fast as we would if we were trying to manage everything ourselves.
Okay, Member Funk, you have a question?
Yeah, with regard, you mentioned the laddering policy in COVID. Not just if we look on the finance side of things, and obviously the interest rates have gone down, but also the timing in terms of revenue. You've got that all lined up beautifully with when we might be expecting to need revenue, and that basically has changed. How badly has our lovely ladder been messed up by the changes in cash flow that have happened as a result of the COVID situation? That's probably a Jerry Rangel question, but whoever wants to take it.
I don't think it hasn't hurt us as of yet, but Jerry or Rochelle may want to comment on that.
Right, so obviously we've lost out on some revenue that would be coming into us, but they're not the kind of numbers, and we still have a good amount in LAIF, so we have that amount of cash, and Jerry's done a good job of laddering. So now we're just looking at kind of those ladder pieces further out. So I mean, in the short term, I think if this were to go on for 5 years, that would be more problematic, but in the next year or two, I think we have everything worked out so that it's not as impactful on us as it is on some of the other agencies.
Great.
Well,
Thank you.
That's a good question, and I wanted to add one thing. We do about 1/3 of our portfolio is in LAIF still, so that's 17 million now, and so the short-term need for cash, we haven't actually timed it so that we know that it's on payroll day or on the property tax dry periods or anything like that. Because of the large amount that was in LAIF, which is you can get one day, you can call today and get the money tomorrow. We don't, the ladder is pretty just evenly spaced out. Now the hole, I filled in some holes over the years since I've been the treasurer. There was gaps where nothing was coming due, and so I, on purpose, looked for investments to fill up those holes. But most of those holes are filled now. The hole now is out 5 years or 4.5 years, and so hopefully we can do something between then and now to take care of that. But again, the short-term cash requirements are not an issue with this city right now.
Great, thank you.
I sent an email, speaking of LAIF, I sent an email regarding CalTrust, which is something I picked up at the League of Cities conference. And Caltrust is a public agency, but essentially it's more or less a JPA for investing. It has 140 cities involved in it. And essentially they serve the same function of LAIF, but according to their literature, they, beat LAIF by an average of about 15 basis points. And I don't know if you've heard of them, Jerry, or if any other cities in our area utilize them, because I think you have to join them before you start to participate. And they have, redeem it tomorrow, call today, redeem it tomorrow funds. They have redeem in 3-day funds, and they have, something else as options. But I'm wondering if it wouldn't be advisable to at least have something like that as an additional option for us if they truly consistently beat LAIF in their return.
I was not able to confirm that they were beating LAIF. There's another one called CAMP that is sort of the same thing. Both of those, in my recollection, got started during one of the state's financial crises, where the state was robbing cities and school districts and counties however they could dip into their pockets and get money. And this was that the fear was that the LAIF was vulnerable to state raiding. And the cities and counties were able to get legislation passed that prohibited the state from doing that. So I'm comfortable with the LAIF being safe from state raiding. And I checked the CAMP just recently, and it was actually quite a bit lower than the LAIF. I haven't looked at CalTrust for a while. I did look at I remember when you sent me that email, I took a peek, and I wasn't convinced that they could do better. And I don't want to generate more complication for our staff unless it's a good reason. I've tried to be sensitive to the fact that they have a lot of other work to do and very few people to do it.
That'll be a good segue to my next question, but I think it's something we might want to check on periodically, because if LAIF has such a huge portion of our investments, even 10 basis points is not chump change, I guess, as long as it's not an overly burdensome administrative thing to get ourselves involved in. And then I was going to move on to something else. Member Funk, you have a question?
Yeah, just with respect to this particular topic, I noticed that in the sheet that Councilmember Bourbeau sent around, their investment returns start in July of 2018. So it's not a very old agency. Don't we have a 5-year minimum on agencies, or would this, because it is government backed, would this agency even be eligible?
I think they've been around longer than that. That's just what they showed. But Jerry's right. They started, their whole thing was they were afraid because the state was raiding every fund they could get their hands on and borrowing things. And so I think that was a basis of starting it. But I think it got started during the financial crisis in, 8, 9, or 10 or something like that. I'm not sure why they're only showing that far back, but I think they have indeed been around a fair while longer than that. So,
okay.
On the topic though of trying to keep things easy for staff, we're always looking for, are there things we have that staff is doing that for us that we don't necessarily may not be worth their time of preparing. Jerry, you mentioned the report, the monthly report, that summary.
Yeah.
Is that something you have to do anyway, or is that just being done for us? Because if it's just being done for us, I think, we might just be perfectly happy with the quarterly detailed one.
I would love to be able to just give you the quarterly detailed one, but I think I can look up the code section that does say that something goes to council on a monthly basis.
Okay, well, if it's not a pain to look that up, you might find we don't have to do it. So,
I'll make an out of turn recommendation along those lines. I believe you could not send the list of accounts payable to the council every 2 weeks or every other, twice a month. there's ways that you can the council can delegate authority, the city manager, the city finance office, to pay those bills without having to have them pre-approved by the council. So that's one thing that I've always felt like was mainly a waste of time, that lists dozens and dozens of checks for $10 refund for a park fee or something like that, on and on and on.
Well, Terry, I actually read those, and Rochelle knows I, maybe half the time have a question for her on one phone. But I thought that those were required, that Jerry Rangel her office had to prepare those anyway, whether they're for council reading or not. I thought you had to prepare them.
I think you'd have to have an ordinance that delegated that the authority to pay bills.
Yeah.
Without, and most, I think a lot, maybe not most, but a lot of cities, and I know a lot of counties have done away with that it's a waste of effort. You could have access to any, you could always ask any question
Yeah.
you wanted.
Well, that's
But
it.
to
So, I
have
mean,
it
if that's
printed-
a special report you're preparing for us, I mean, or is it just something that's kept in that format and you're essentially just printing it out and there it is? Is it just a printout essentially of your accounts payable system, or is it a report you're putting together for us to approve?
That report we put together for you because we have to merge a couple of different pay dates in there. We do have sometimes some items that are payments to family care, what do you call that? Family withholdings that we, kind of withhold some names and stuff on that, so those don't go out. So we do have to do a little bit of special reporting to grab that information, but I'm excited to hear that, and I'm certainly willing to look into Jerry's suggestion if
I'm not the one doing that work on that one,
Well,
but Charles,
yeah.
you said you were looking for saving of time and stuff.
Yeah, no, I appreciate that suggestion. I think we always have to look into those, and I assumed it was more or less just a printout and something it was required. But if it's not required by state law, I do think council, I mean, maybe that's just me as a financial guy, I think council should take an interest in, looking at what we're sending our money out the door for, at least occasionally. I'm sure sitting on the IWMA that they wish they paid more attention to what all the checks went out the door for. So as long as, I guess I'd want to know, okay, as an interested member, if I wanted to say, well, hey, I want to see all the accounts payable, because the ones that interest me, frankly, are not the checks to employees or PERS or to the insurance companies. It's we spent $23,000 for some strange sounding vendor, and I'm curious what the hell that is. And Rochelle usually knows, or can look it up. That's kind of more the stuff that I'm interested in anyway and ask questions about. But I'm more interested in saving your time. And if it takes you, 5 hours a month to generate this report, then that's probably 5 hours a month that could be better used.
There's one other, Rochelle and Jerry, I think you wait till that's approved before you cut the checks, right? Or before you mail them at least. No, you've already mailed them out? Okay. Some of the cities have, they don't pay the bill until the council's approved it, and then they send the bills. And that can be a real problem. You got a vendor, you need to get the money in your hand tomorrow to get a discount or to do something. So
Yeah, that would be
doing that. That's at least that's better.
Yeah, that would be completely untenable, I think, for a finance department.
Well,
to
we
wait for
only meet 2 times a month.
Exactly.
I'm pretty sure the city of Paso Robles was that way. It may still be. I don't know.
Yeah. Anyway, well, I think I'm open to you coming back, looking at that a little more and coming back. It's just 2 of us, so you can talk with Councilmember Funk and myself without creating a Brown Act situation about, any idea you come up with on that, in that regard.
Terrific.
Yeah, I'll relook at it with the attorneys I know I tried it once, and got no luck. But if Jerry says there's a bunch of agencies out there, clearly they figured out how to do it. So let's give it a shot again.
Well, I'm not the one that's going to recommend that one because I don't write the checks. I don't sign the checks. I'm prohibited by city ordinance from doing either of those things.
Yeah. Maybe though the council would task, we delegate the payments to Jerry Rangel, but we task the city treasurer with reviewing them.
No thanks. Well, then you can up my pay a lot.
I do think that it's worth finding some way that might be more efficient for council members to review what those checks are going out the door, and to have that available so that the public can see that. The sunshine of that is helpful, but to have it in this formal report necessarily in quite the same way is, there might be I'm open to any more efficient way of accomplishing that. As Rochelle knows,
Okay.
I too look those over and periodically ask questions about why are we spending $20,000 on frames? No, it's farms and it's going to the zoo. Someone's eating that. Okay, got it.
We used to get calls at the county or people in public comment going, I see you wrote a check to Alex Madonna for $25. Now, what's that all about? Is this a kickback or something? And it was, no, he reserved a camping spot at Lopez Lake. And that's his deposit, and he was getting the deposit returned, But because it was some high-profile individual, they wanted to know. And I don't, okay, it's legal for them to know, but does it need to be advertised that way? I just didn't think so.
I have one other question for you regarding the investment policy. Within the last few years, we had amended the policy at your suggestion to include supranational securities. So I appreciate the work you do on this of constantly looking at this to try to improve our returns. I see, in our investment policy, we have commercial paper listed as an allowable investment. But if I'm reading our reports correctly, we don't have any investments in commercial paper, right?
No, they're mostly very short term, and I'm not interested in churning over something every 2-3 months. Again, to make $50 extra and $500 worth of staff time to do it just doesn't make sense to me.
Right.
Big treasurers are constantly selling and buying it in and out. Working on a couple basis point change and something, and we don't have the time and we don't have the money to make sense doing that. So
Actually, the reason I ask is
bankers' acceptances are in there too, but
Right.
they're usually like 90 days or less, and I'm not interested in a 90-day investment.
no, for anything, short term, use LAIF or similar mechanism. Reason I ask is City of SLO, had some news making thing from by changing their investment policy because they were going off on, we don't want to invest in tobacco or whatever. And I'm going, why? In what way would you be investing in individual companies? And the only way I could think of and recalling being there would have been their agent would sometimes invest in commercial paper. And because otherwise, we're certainly not making decisions about what kind of companies to invest in.
So R.J. Reynolds is commercial paper that they put out, and you're not really buying stock. You can't buy stock in a tobacco company, but you could buy
Exactly.
debt of a tobacco company.
Yeah, exactly. I didn't see any, what the correlation was in any way in terms of how you'd even be, in choosing individual companies. But okay, good to know. And I think, are we ready? We're going to need a motion if there's any further questions.
Public
And we're going to need public comment if there is any. Go ahead, Susan.
Yes, I do have other questions. I just was inserting them when they were topical. So a few others. On page 19 in section 2, one of the things that it mentions is it defines U.S. government obligations U.S. government agency obligations, and U.S. government instrumentality obligations. Could somebody define or give an example of those that can distinguish what those are? In particular, what an instrumentality is versus the other two? I didn't see it in the glossary. Maybe I missed
That's
it.
what I was looking at.
Isn't like Federal Home Loan Bank Board, or Fannie Mae and Freddie Mae, aren't those instrumentalities of the federal government?
No, they're agencies.
I didn't think there were.
I think the
Well, yeah, they are
instrumentality might be like a Virgin Islands or Puerto Rico, something like that.
I'm-
Okay.
I think it's more
That's
things
what the
that,
government code says. I think that's a direct lift from the state government code.
you mean the phrase instrumentality of the federal
Yeah,
government?
The IRS says that it is generally an instrumentality, performs governmental functions, but does not have the full powers of a government, such as a police authority, taxation, and eminent domain. So,
Yeah, I think like the Export-Import Bank is probably an instrumentality of the.
it might be. I don't know.
Yeah.
Okay. That's fine.
We can look
I'm
that
not
up.
going to invest in something I don't know what it is. That's for sure.
Well, good. That's good. That's good. That's a starter.
We did have some CDs from a Puerto Rican bank, and we checked into that to make sure those were legal. So it is.
Yeah. Yeah. Also on that same page, in one of the areas that you're looking to have new authority, you're talking about bonds payable solely out of revenues from a revenue producing property owned or controlled by that entity. I think I know what you're talking about, but can you give us an example or two?
Yeah. So a city or a county runs a water utility, and the pledge of all water revenues is what supports those bonds, not property taxing authority. So they're considered a little bit riskier, but they get ratings, and they're Metropolitan Water District in Los Angeles is considered very safe. It has bazillions of debt out there. That's the kind of thing. Water, sewer. It can
Well,
be even a parking authority.
I was to say, Slow would issue bonds to build a parking structure and then pledge the revenue from parking to pay back the bonds.
Yeah, and you also can have foreclosure. Is if they don't pay, the revenues are insufficient. The debtor, the creditors' recourse is to come in and take over the parking structure or the water or the sewer utilities. Would never happen, but there is some recourse. That's why they get pretty well rated. They often get well rated.
So
It
there's an
happened.
attachable asset.
There can be. It happened in Stockton where they gave up their parking garages that they had listed as collateral.
Mm-hmm. So along those lines, then, let me just run a scenario past you. And this is particular to on the next page, to number 4, where it's essentially the same thing, but those might be entities that are operated outside the state of California. So if I get this correctly, we could say invest in, buy a bond for a toll bridge in Louisiana, right?
Yeah.
Where you have an attachable asset that is supported by the revenue that it generates. So, a couple of years later, it gets wiped out by a hurricane. But following the news, what's the protection that we have at that point as a city? Who's standing behind that bond, or what is standing behind it?
Well, that's part of the consideration of how it's rated. So you could look at what the rating is based on, and it may be that there's an insurance company behind it, or it may be that the government itself is considered strong enough to back those up. If it's not, then we probably wouldn't buy it unless it was highly rated. um, you know, you don't want to have to foreclose on a parking structure in Louisiana or anything like that. Nobody does. But you wouldn't be alone. See, there would be a group of creditors, the worst case scenario. We had that in this county. The Los Osos Community Services District walked away from some bonds they had issued to build a sewer plant, which they stopped the construction of the sewer plant. But they had pledged property taxes in that case. So that was one of the things I had to do. I had to go to the national markets and saying, we will pay those bonds. That district, a bunch of idiots, and they went bankrupt, but I'm going to pay those bonds. And I got legal authority. I had the legal authority. We got it confirmed by a bankruptcy judge that said, yes, you should still pay those bonds. So there is ways to get security, but you don't want to be involved in something like that if you can help it. We certainly didn't want to, but the county did not issue those bonds, the Los Osos CSD. They did it, and then they declared their own bankruptcy. How I got involved is I was the guy who collected the taxes to pay those bonds. So I had to go to the judge and say, I want to still be able to collect these taxes and pay these bonds, because the creditors didn't do anything wrong. They relied on our promise that we would pay them, and we're paying them. And we did.
Very good. Yeah, that sounds fine. I would, as we open up this this authority, if I may be so bold to add a personal perspective to our wise treasurer, it seems like we would want to stick close to our knitting when we're looking at obligations that go out of the state of California, because the further away that we go, or the more different the place is, the more likely we are to get into risks that we might not fully anticipate.
And
So-
I agree, Council Member Funk, and probably we would, I mean, very rarely, I think, would we go outside. There's no need to go outside the state of California in most cases. There'd only be some rare situation.
Sure. I am comfortable with keeping that authority safe, legal, and rare, as is said, and leaving it to that the discretion with that in mind.
And
Let
it
me
is
find
limited.
any other
There's a
questions.
30% limit again on those. So
Sure.
it's still too much money. We don't want to lose even $10. So we'll try not to.
Well, yeah, and we don't want, as you say, we don't want the limited time of either our treasurer or the city staff to be tied up in chasing down some problematic situation in an investment that went bad far away from home.
Well, that's why we could
Or
buy.
close to home either, but especially far away.
We buy certificates of deposit from banks, but we only buy them up to an amount that's insured by the FDIC.
Mhm.
Because banks do go under every so often. And again, why worry about that if you don't have to?
Right. A couple of other minor points that while we're in discussion, I think are at least loosely attached to the agenda. One element of the policy on page 17 indicates that the investment officer may choose to invest in instruments offered by minority financial institutions. And my assumption is that that's included because it's a way in which cities can help build a more equitable and profitable future for the community. And the way that you can help quietly address some of the inequities in wealth generation that happen when, for instance, minorities are forbidden from owning homes in a community for a sustained period of time, as we've seen here in our community and in many places in the county. So I'm just wondering if we're doing that right now.
No, I don't. It's not even been proposed. I don't know of any requests for that kind of thing.
Yeah. It's not like we have a lot of minority financial institutions in the area, but it is something that we consider.
I mean, I don't recall directly from our thing, but we don't actually have anything invested locally, do we? I mean, we don't have anything invested in a local CD of of Mission Bank or, a local branch of Bank of America or anything like that, do we? I mean, we could, but that's not where we're finding the best rates, I assume.
If they were competitive, we would do it, but we have only done insured CDs. So, okay, we could buy $250,000 it's not Rabobank, Mechanics Bank or Union Bank or Pacific Western Bank or whatever, but that's not going to make or break them. That's not going to make a huge difference in there, and they're not minority.
Right.
No, I just meant that, I mean, in SLO, they tried to make a point of investing locally, and I was moving something from one local institution to another and actually kind of caught a little hell for it. I was chasing a higher rate, but they invested a certain amount, in the local bank down the street, so to speak. And I didn't think we certainly could, as mentioned, but we typically don't because they're not, if you're going out and shopping for CD rates, it's going to be from typically the highest rate today is going to be from some institution somewhere else.
Mm-hmm.
I've looked at those in the past, or I've had even people request that in the past at the county and at the city of Morro Bay years ago when I was there. But one of the problems was if they're a local bank, they're going, well, we're struggling, so we think you ought to help us, which is the last place I want to put the city's money into somewhere where there's risk. And so if we do it insured, okay, it used to be 100,000, now it's 250,000, so it's a little bit more, but still they need millions, and they may need millions to bail them out, and that's just not our role.
Right.
And I think you've got things like CDBG grants and stuff that you've got available to the council to make direct support for some of these projects and some of these groups that makes more sense than putting money in their bank. Because the banks won't guarantee. If I give you $1 million, will you guarantee you'll make loans to a bunch of minority people? They won't guarantee that. They can't.
Right.
And my point was that we don't really invest locally, regardless of who owns the institution. We that's just not by we don't not do it by policy. We just don't do it because we're chasing the best return wherever that happens to be, I guess.
We do happen to have a couple of CDs through Pacific Premier Bank for the road loan program. So I think a couple of those CDs are still outstanding.
For the what program?
The road loan program, the neighborhood road loan program that we did, a decade ago or whatever.
Gotcha. Okay. Susan, did you have any other questions or comments?
Yeah, let's see. I think I just have one other. I'm looking at my notes here. Yeah, one thing that I brought up at least once before in terms of the city's marginal cost of money. And as we are, because that gets figured into the rates when we allow a developer to defer their payments of fees to the city for a period of time. We generally run those contracts at the city's cost of money. And to my mind, I want to see that at the city's marginal cost of that money, which would be on our invested money, LAIF, or now if we're expanding this, our invested pool. And I'm just wondering how that gets accounted for with the changes that we're making so that we properly account for the city's opportunity with those funds when we offer those deals.
I can't answer that. I don't.
I can chip in.
Rochelle or Gary maybe.
Typically, I think we've had a look back period. Rochelle, do you remember, is it 12 months or 18 months or something that we look back and look at the rate that we had, the city's rate, and kind of project that forward? Is that your recollection, Rochelle?
You're muted.
Sorry. I would have to pull those agreements. I think we may have just done a simple LAIF at that time. The idea was to help those developers get there, make sure that we were complying with state law. I think the thought was that the investment of getting the hotel or the movie theater or some of those was more important than the rate of return on that. But in order to comply with state law and some of the other things that it would trigger if we couldn't show that there was some connection to market rate, that was why there was an interest rate in there. But I would have to look back. I may think it may just be LAIF on the day it's approved by council or the previous quarter or something along those lines, may tie to the previous quarter's treasurer's report, enough to satisfy that it's not a gift of public funds or something that would trigger prevailing wage, but not so high that it doesn't make it an incentive for the developer to invest.
Right. This would be a small difference. We're not talking, you know, with all due respect to our wonderful treasurer, we're not going to get rich on these changes. You know, we're going to
No,
maybe get.
absolutely not. These are at the margin. And right now, everything is so low. But even at best, you know, we've been up, what, maybe 3.5%, 4% on an average at certain times per year. Most developers, they're going to go, I can't borrow money at that and pay you at 3 or 4%. I'll be glad to pay you 3 or 4% if you forego your development fee or whatever it is you're foregoing for a while. So there's not any danger of that drying up that program, I don't think, at all.
Yeah, that's my thought too, that the gap between the corporate cost of money and the city's cost of money or opportunity with those funds is sufficiently large that, you know, whether we're offering, you know, a few basis points, you know, that at a few basis points higher interest rate to reflect the, you know, the efforts that we're making to get a better return on the portfolio, it'll still be a great deal for the developer, and they'll happily stomp on it. And it will achieve our objective in offering that program, which is to support that developer in creating something that's a long-term asset for our community.
I think we're looking at that, though, that's not really part of the investment policy. That's really more, you know, we look at a discrete individual development and say there's something we can do, and then we just have to comply with state law to make sure it's not a gift of public funds. And if we want to charge them a higher rate because, you know, it's still a good deal for them, I think that's not so much the investment policy. It's more of an individual decision based on the project. And I don't know if Rochelle, if you comment on that, or is that a correct way of looking at it?
That is a correct way of looking at it. I will tell you, at the last one that you authorized, the Hilton Home 2 Suites, their financing for their project said, nope, we want you to pay it off. So they ended up not taking advantage of that loan. So how effective it might be in today's, you know, financing economy may change based on what's out there at the time, but it's still there.
Sure, we just can be attentive to how we do that in future projects so that we make sure we account for what's the opportunity cost for that, and then we can be supportive of the project. Okay.
Okay, anything else, Susan?
That's it for me.
I have one other question relates to investment policy. I think the answer to this is no, but I know we have no general obligation bonds, right? All of our bonds relate to either redevelopment agency or things like that. And the reason I asked the question is, I remember in SLO, you know, they paid $1 million for the big ladder fire truck, and they actually got a loan on it for 3.5%, 4%, and actually had these little payment coupons like a big car loan. And I thought, you know, it doesn't make any sense at the time. You know, we were making peanuts on LAIF and other things. Why not just pay it off? You know, borrow money from ourselves out of one of our funds, pay it off, and make the, you know, pocket the difference in the interest paid. Do we have any obligations that we're paying on where maybe we're paying 3 or 4% And, we could take some of the money we have stashed in the LAIF, pay it off, and then pay it back from the affected fund?
No, when I started, we used to lease our police cars and our fire trucks and copiers and everything else at outrageous interest rates when we were earning very little. So we stopped doing that a long time ago. We just have the 2 redevelopment bonds outstanding, compensated absences, PERS. Those are our only long-term debts. No other even small leases. Is that correct, Jerry?
Yes, that is correct.
And okay, and nothing out of the water fund or anything like that? Yeah. Excellent. That's
I
a
put
well-managed
stop to
city.
those at the county many years ago because it was ridiculous that they would lease a copier machine and the internal interest rate was 12-15% on it, and we were getting 5 at the treasury or something at the time.
Yeah.
Okay. All righty. Well, just thought I'd ask. And I think, let's just check with Luke. Is there any members of the public that want to make any comments?
We do not have any public in attendance right now.
Okay. So we'll bring it back to the board committee. If there's not any further discussion, we'll entertain a motion. Go ahead, Susan.
I'm looking in the documents for how to phrase the motion, but
just-
I would move the recommendations as outlined in the staff report.
Very good. Do we have a second? Okay. Michelle will second. Amanda, you've got that? I think we're good for, or any discussion, or are we good for a roll call? Okay, let's go to roll call.
Vice Chairperson Funk,
Yes?
Committee Member Rickard,
Yes.
Committee Member Seebach,
Yes.
Committee Member Rangel,
Yes.
Chairperson Borbeau.
Yes.
Motion passes.
Okay, so our next, and thanks again for all your guys' work on that. On these.
Yes.
And so our next thing is individual determinations. Does any member of the committee have anything they'd like to bring up for perhaps further discussion at another time? I'm seeing nodding heads. Okay, in that case, I think we're ready to adjourn right as we approach 4 o'clock. So very good. All right.
Thank you all.
Thank you all.
Very much.
Hey, Jerry, I did want to talk to you. Can I get your phone number? I think I lost it. Jerry Seebach.
Yeah, okay. You want my cell number?
Sure.
805
Okay.
459 5258.
5258. Got it. All right. Thank you. We're all out.
Thanks, Luke. Also. Where am I?